Hi there, good morning. Welcome to an exciting day to talk business. My name is Blyden Lukem and it's Business 360. In today's edition of Business 360, we'll look at the key features in it, beginning with an entertainment story. But the peculiarity of the event was that yesterday, the market cap of the Nigerian stock market dropped by 162 billion naira. Let's begin with business entertainment. A Chinese man who carried out a gas station robbery in 2009 and walked away with 156 yuan, an equivalent of $22, spent the last 14 years of his life hiding from the cops in a remote mountain cave. Liu Mufei, from village in Enshi City, China's Hubei province, was in his mid-30s when he took part in a gas station robbery along with his brother-in-law and another accomplice. They ended up with 156 yuan, an equivalent of $22 between them, 60 of which they quickly spent on some food and fireworks, which left them with just 32 yuan, about $4.60 each. The three men parted ways, but it wasn't long, before police found Liu's accomplices and arrested them. The man realized it was only a matter of time before authorities showed up at his doorstep, so he decided to go into hiding rather than risk prison time. Little did he know he would spend the next 14 years in a prison of his own making. That's a concern about doing the right things. Let's move to the US. The Biden administration will continue to discuss India's purchases of Russian oil with government officials, but is satisfied so far that a New Delhi is buying the crude well below a Western price cap, according to senior State Department officials. India's purchases of Russian oil are a constant topic of discussion between the US and India, as Washington seeks to deny Russia the revenue it needs to fund its invasion of Ukraine. According to US officials, it is good both for the Indian economy and for stabilizing oil markets that India is buying crude at deep discounts from the cap. There's a concern around the world amid market cap and sanctions from Europe and the US on Russian oil, and India is buying from Russia but at a low price, and US seem happy. Let's come back home looking at Seplat Energy PLC. Seplat Energy PLC has said that the sale and purchase agreement to acquire the entire share capital of Mobil Producing Unlimited Nigeria for $1.28 million plus up to $300 million contingent consideration was still awaiting presidential approval. Its Chief Executive Officer Roger Brown made the announcement while commenting on the audited results for 2022, which recorded a rise in profit before tax by 15% to 87 billion naira from 71 billion naira year on year. According to Brown, the company hopes to conclude the transaction before the end of the current administration. Looking at the oil sector amid fuel hikes. Oil marketers under the Petroleum Retail Outlet Owners Association of Nigeria have established and deployed a task force to check the sanctioned filling stations selling premium motor spirit, popularly called petrol, at exorbitant prices. According to reports, some filling stations were dispensing petrol above 300 naira per litre, far higher than the price approved by the federal government. Filling stations operated by major marketers and the Nigerian National Company Limited (NNPCL) were selling petrol between 194 naira and 200 naira per litre. Other outlets operated by independent marketers dispensed the product between 250 naira and 340 naira per litre. Meanwhile, the president of Petron, Billy Gillis Harry, explained that marketers who access the product from NNPCL should not dispense the commodity above 200 naira per litre, but was quick to state that it was currently tough to get PMS from NNPCL. That's the concern and outlook within the country regarding fuel hikes and accessibility of this commodity. Total assets of Nigeria's banking industry grew by 14.36 trillion naira or 24.24% from 59.24 trillion naira at the end of December 2021 to 73.59 trillion naira in the corresponding period of 2022. The Central Bank of Nigeria disclosed this in the personal statement made by the Deputy Governor Financial System Stability Directorate, CBN, Aisha Ahmed, at the last Monetary Policy Committee meeting. She said, key industry aggregates also continued their year-on-year upward trajectory, with total assets rising, while total deposits rose to 45.5 trillion naira from 38.42 trillion naira over the same period. Still looking at Central Bank's reports. The Central Bank of Nigeria plans to raise 1.13 trillion naira via treasury bills for the second quarter of 2023. This was according to the latest Nigerian Treasury Bill issue program for the second quarter 2023 available on the bank's website. This is a significant increase from 926 billion naira raised in the second quarter of 2022. The bills are divided into three tenors of 91 days, 182 days and 364 days, with a plan to raise 23.67 billion naira, 34.7 billion naira and 1.08 trillion naira respectively. That's the outlook within the country Nigeria and the peculiarities of events and businesses. It would be a good time to look at global economy, beginning with economic calendar, indicating data releases for today, Thursday, March 2nd, 2023. We will look at the economic calendar and the release this morning and the expected data to be out later in the day. The economic calendar. The economic calendar has some indication from Australia. Beginning at 1:30 a.m., building permits month on month according to preliminary estimates in January came out indicating negativity of 27.6% in Australia. Previously it stood at 15.3%. The one highlighted around 6 a.m. this morning was the Japanese consumer confidence. It came out at 31.1 index points. Previously, it was at 31 points, indicating an improvement by 0.1 points. The focus indicated consumer confidence could go higher to 32 point index, but it never happened. Let's look at the next day, what the consumer index for most of the countries would be and the unemployment rates. At 11 a.m., 11 a.m. in the afternoon. We'll begin with unemployment rates in the Euro area. Unemployment rates in the Euro area this morning was at 6.7%, the outcome. Previously, it stayed at 6.7% and it remained 6.7%, no difference in the Euro area. Inflation rate year-on-year flash gave the February outlook at 8.5%. Previously, inflation was at 8.6% in the flash. The focus indicated a further slowdown to 8.4%, but it stood at 8.5%. Still, inflation rate year-on-year according to preliminary estimates for February in Italy, it came out at 9.2%. Previously, it stood at 10% and the target was 9.3%, doing better than the expected target of 9.3%, staying at 9.2%. Further data would be indicative of what's happening in the market, giving the picture of investors' outlook. Let's look at Nigeria's perspective and its economy, beginning with private sector contraction. Nigeria's private sector contracts in February to 44.7 PMI. PMI represents Purchasing Managers Index. The Stanbic IBTC Bank Nigeria Purchasing Managers Index PMI sank to 44.7 in February of 2023 from 53.5% points in the prior month. The latest reading pointed to the first contraction in private sector businesses and its condition in over 2 years, ending a 31-month sequence of expansion. Steep reductions in output and new orders were observed, attributed to the car shortage challenges experienced across the country during the month. Consequently, firms scaled back their purchasing activity and employment. Persistent fuel shortages saw fuel pump or petrol pump prices increase, which added to price pressures and led to supply delivery delays. Lastly, business sentiment was at 5-month high, supported by hopes that economic conditions will improve alongside business expansion and investment plan. There's a slowdown in manufacturing activity in Nigeria. It would be a good time to look at data and charts indicating manufacturing activities in Nigeria. The data shows that as at January 2020, the index was at 1.3. It further dropped downward in 2022 July to negative 8.8, but went higher and higher, and it had been the situation, and going up to 9.4 as of July 2022 in Nigeria. But the outcome has shown some slowdown in the economy of Nigeria regarding manufacturing in the country. That slowdown hitting to 44.1. It would be a good time to go to the commodities to see what the energy market is saying, as well as agriculture and the rest. Beginning with energy market commentary, Larry Shover is standing by. The indication is that WTI futures closed higher despite Wednesday's EIA data showing larger than expected inventory builds. Larry Shover discusses this. Let's hear from Larry.
Well, after touching 1-week highs yesterday, WTI opens today's session on its back foot. It would appear there's some carryover from yesterday's API report suggesting a significant build in crude inventories, also showing that Cushing inventories were up by about 500,000 barrels. Overnight, we had some economic data, including China's manufacturing PMI, which hit a level that we have not seen since 2012. The non-manufacturing PMI also better than expected. In the U.S., we had February ISM manufacturing, which did disappoint, and prices paid subcomponent was up to the highest level seen since September of 2022. That said, in the early session, traders were monitoring.
Thank you, Larry, for the perspective. It would be a good time to look at the energy market and the details in the energy market this morning, what the price of WTI crude is, amid all the concerns and data expected to be released from Europe. The energy market. The market this morning is indicative of some positivity, but it's still a slowdown. It's not been volatile in recent weeks, and the conditions have been just 3.45% appreciation on a weekly basis. Crude oil, US crude, current price $77 per barrel, upward by 0.2 points, a 0.27% appreciation. Let's look at Nigeria's price benchmark, Brent crude oil. Brent crude price is $84 per barrel this morning, upward by 0.253 points, a appreciation. On a weekly basis, it gained 3.27 percentage points. For natural gas, it's slightly downward this morning. Gasoline slightly downward this morning. Heating oil a little here, a little there, not really upward. Coal slightly downward, and TTF gas slightly upward this morning. Let's look at the metal market. What the metals are saying this morning. Gold price is downward this morning, silver downward, copper downward, but the major decline is in gold. Current price $1,831 per ounce, upward or downward rather by a negative 0.31%. For silver is a slight downward movement of negative 1.3%. For copper it's a little here, current price $4 per pound, dropping by 0.081 points, a negative 1.95% decline. Iron ore gained 20 points this morning, a 0.48% appreciation. Rather, steel gained 20 points. Current price 4,220 Chinese yuan per ton. Iron ore gained 2 points. Lithium, no significant difference here in this morning market. For platinum, is downward by 1.51 points. Good time to look at the agricultural market, what the price of wheat is in the morning market. Beginning with soybeans, $1,508 per bushel, upward by 4.25 points, a 0.28% appreciation. For wheat, a slightly upward too by 6.85 points, a 0.98% appreciation. But lumber is downward by negative 6.48% depreciation. Palm oil climbed by 111 points, going past the 4,200 mark that is lingering before. Decent gain for palm oil, a 2.65% appreciation. And that's the story around the agricultural market. Let's have a look at the foreign exchange market, indicative of the prices of these pairs, the majors against the crosses, talking about the US dollars and the rest. But we'll begin with market commentary by Bob Icino. Euro futures pushed the steepest rally in 1 month as Germany, France, and Spain inflation data comes out higher than expected. Bob Icino will give us an outlook on this one. Let's hear from Bob.
In the currency quadrant, taking a look at the March Euro currency futures up 1% on the highs. 2 of 3 sessions now, the Euro has been up and it's having its best day since February 1st. Now, prior to those last 3 sessions, the Euro had 4 consecutive down sessions and was down 3 of the last 4 weeks. But currently, the Euro is working on its 2nd week higher in the last 5. And so far, at least, it would be the best performing week on a percentage basis for the Euro since January 9th. Today, going into the New York close, we were up a little bit more than 0.6%, which is still the best day since February 1st, but not too much better than 2 days ago. On the high today, 106.99 was up a little bit more than 1%. On the low, 105.73 was down just short of 0.2%. Now, German inflation was the major driver today, 3rd critical Eurozone nation to report stronger inflation in the last 2 days. We had France that had record inflation in the time of the Euro, highest print they've had since the Euro has existed. Then we had Spain as well reporting over 6% inflation today. Germany's year-over-year headline inflation came in at 8.7% versus expectations of 8.5. Month-over-month inflation rate came out at plus 0.8 versus an expectation.
Thank you, Bob Icino, for the outlook. Inflation in Europe, Italy, Germany, Spain is affecting the outlook of the euro. But let's go to the market to see what the persuasion in the market is this morning amid the struggle for euro over time. The euro against the US dollar market first, which the majors are doing the bit they can. The market this morning has seen some weakness for the euro amid inflation data across Europe from Italy, Spain, and Germany. The concerns has been up there and the struggle continues for the euro. Current price $1.06 US dollar equaling €1, dropping this morning just slightly, not significant, a 0.0038 point, a negative 0.36% decline. For pound against the US dollar, it's been similar struggle coming down from the 1.2 mark. It's currently 1.19 US dollar equaling £1 at the international exchange window, downward by 0.05 points, a negative 0.45% depreciation. The Aussie also struggling against the US dollar, but the US dollar looks a bit decent this morning. Let's see the persuasion that comes with Naira against the majors, the US dollar against the Naira. It's been difficult for the Naira and as well difficult for the US dollar in the African market perspective. The US dollar against the Naira is still lingering around 459.97 Naira equaling $1. The struggle continues, market still ranging, no difference in the market. The euro against the Naira in the international exchange window. The euro had gained reasonably 3.8 points according to yesterday's close of the market, a 0.8% appreciation for the euro over the Naira. For the pounds against the Naira, current price 553.4 Naira equaling £1, upward by 0.54 points, a 0.1% appreciation gain for pounds over the Naira. Let's go to the parallel market to see what is happening in that market this morning regarding the Naira against the majors. The dollar to Naira, if you're buying it, is at 757 Naira equaling $1 and 754 Naira to $1 if you're selling it. For pounds to Naira, 935 naira equaling £1 at buying rate, and at selling rate is 918 naira to £1. For the euro to naira, it's 790 at buying rate and 775 at selling rate for euro to naira. Well, there are indices for the rand, South African rand against the naira, the dirham to the naira, the yuan to the naira, the Ghanaian cedi to the naira. Let's look at the cryptocurrency market to conclude on the foreign exchange market, beginning having an outlook of a digital market after looking at the fiats. Bitcoin struggling to go past the $25,000 mark. Current price $23,394. Market is moving fast. $94 per Bitcoin, downward by 165 points this morning, a negative 0.69% decline. On a weekly basis, Bitcoin has dropped by 2 percentage points. For Ether is a similar story, dropping 16 points this morning, a negative 0.97% decline. The rest of the crypto market seem to be struggling this morning after following Bitcoin and the struggles that comes with Bitcoin. It would be a good time to look at the stock market around the world, but we'll center our stage on the Asian market. The Asian stocks mostly declined this morning. Asian equity market fell, facing pressure from rising treasury yields as investors weighed the prospect of a higher peak in US interest rates. Investors also digested a raft of economic data in Asia, headlined by South Korean manufacturing PMI, which contracted for the 8th straight month in February. Shares in Japan, Hong Kong, and China declined, while Australian stocks rose this morning. Let's see how we can conclude with the Nigerian stock market. According to yesterday's market persuasion, the equity capitalization in the Nigerian capital market depreciated by a negative 0.53% on Wednesday, a few hours after the All Progressive Congress APC candidate Bola Ahmed Tinubu was declared the winner of the country's presidential election. The market capitalization dipped by 162.14 billion naira from 30.4 trillion naira to 30.23 trillion naira following a sell-off by investors in the capital markets. The All-Share Index dropped by 297.65 basis points to close at 55,508.61 points. Investors traded 565.82 million shares worth 6.57 billion naira in 4,340 deals. Let's look at the top gainers. Veritas Capital led the gainers list with a 10% rise in share price, moving from 20 kobo to 22 kobo per share. The bottom losers. John Hall topped the losers table after shedding 17 kobo to drop from 1 naira 76 kobo to 1 naira 59 kobo per share. A good look at the top volume. Capital Hotel led the day's trading with 333.23 million shares, valued at 2.33 billion naira. This is where we draw the curtain on today's edition of Business 360. My name is Blyden Kim. Thank you for watching.